Hi, this is Lara at Elliott Wave Stock Market with your end of the week analysis for the S&P 500 for the trading week ending Friday the 20th of May. And this is our last publicly available S&P 500 analysis to end our promotional week. I'm changing the wave count at cycle degree to this wave count, which has been an alternate for us for quite some time. We've been running it alongside our main. This alternate wave count sees the all-time high as the end of an impulsive structure at supercycle degree. So this is where cycle degree wave 5 ends. Thereafter, we're nearly halfway through a corrective structure at supercycle degree, where cycle wave A has subdivided into a three-wave structure. I originally developed this, what was my alternate wave count, and now is my main, because I think the structure of this downwards piece of movement for the credit crunch is most easily seen as a zigzag. I like the subdivisions much better than trying to see it as an impulse. We have a nice 5-wave impulse here for A, a brief B, and a nice long 5-wave impulse here for primary C to end cycle A. And primary C here is just 62 points short of 2.618 the length of A. Considering the length of primary C is 773 points, 62 points off of Fibonacci ratio is an 8% variation, which I expect is reasonably acceptable. So we can say that A and C at primary degree have a Fibonacci ratio between them. Wave B at cycle degree must subdivide into a three-wave structure. It's subdividing into a zigzag. We have a 5-3 and we're working on a 5-wave structure for primary wave C. When wave A subdivides to a 3, we can eliminate the possibility of a zigzag, so B may move beyond the start of A. The most likely structures if A subdivides into a 3 are either a flat correction or possibly a triangle. A flat is much more likely to achieve a decent depth of correction after this very long 5-wave structure. A flat correction requires wave B to be at least 90% the length of A. That's achieved at 1494.16. The most common maximum length of B in relation to A is 138% the length of A, and that will be achieved at 1921.62. So we should expect price to continue on up at least to this minimum target, and probably to end at least above here and probably before this point. I have more accurate smaller target zones on my daily charts. So this is the big picture on a monthly chart. The credit crunch was a zigzag down, and now we're in a zigzag up that's extremely likely to make a new all-time high. The most common type of flat correction is an expanded flat, which requires B to move beyond the start of A. So the likelihood that we're going to see a new all-time high for this wave count is very high indeed. That would see the S&P following on the same kind of structure as the Russell and some of the other indexes. Taking you now to the first of two daily wave counts, where the low for primary B here is this point down here, and here's our 5-wave structure up for primary wave C to end cycle wave B. One of the other reasons why I'm much happier with this wave count is also the duration of these waves. This fits much better as a cycle degree wave. This B wave, rather than a primary degree, would be very long for a primary degree wave, but as a cycle degree wave, this whole big zigzag that we see on the monthly chart has a much better fit in terms of duration. Within primary wave C, we have 1, 2, an extended third wave, fourth wave zigzag, and a fifth wave working up. There is no alternation in structure between 2 and 4 at black or intermediate degree, but there is alternation in depth. 2 was a deep correction, and 4, in relation to the third wave it corrected, was a very shallow correction. Wave 3 black here is just 5.42 points short of 2.618 the length of this short little wave 1. So this third wave is extended and has a very close Fibonacci ratio to the first wave. The fifth wave also looks like it's extending. We have a 1, 2, and within 3, 1, 2. I also like this wave count now, seeing this downwards movement as a minute degree wave, showing up as a big zigzag on the daily chart. This has a much better look in terms of duration than seeing it as the sub-minute wave our previous wave count saw it as. Targets are the same. We expect upwards movement at least to 1494.16. This is our smaller target zone where we expect price to end up in, where wave 5 black, beginning down here, will reach equality with wave 3 black, and where wave C at primary degree will reach equality with wave A at primary degree. And again, the upper maximum expected length of this wave for this wave count for upwards movement. Within wave 3 black, there's a nice ratio between 5 and 1. 5 is just 2.61 points short of 0.382 the length of wave 1. The third wave was reasonably close to 0.618 the length of 1, but not close enough to really say that that's a decent Fibonacci ratio. Taking you now to the first of 2 hourly wave counts, with the high for 1 pink and the low for 2 pink down here. Here's the high for 1, here's the end of the zigzag for wave 2. Here's the first impulse up within wave 3 pink, and a zigzag down for a second wave, which is correcting it. It's likely that the second wave zigzag was over here. When we look at this piece of movement here very carefully on a 5-minute chart, we see a nice 5-3-5. And this upwards movement is a really nice impulse. This downwards movement is an incomplete corrective structure. It needs a little bit more down to go. Wave 2 purple may not move beyond the start of 1, below 1330.67. This wave count expects just a tiny bit more downwards movement before we see upwards movement, and the third wave at orange degree should be able to take price outside and above this wide parallel channel here on the hourly chart. It'll breach this channel first, and eventually when it's breached the wider channel, that's when we can have confirmation that wave 2 pink zigzag is over, and wave 3 pink at that stage is underway. Until we have trend channel confirmation, we must have to admit the possibility of new lows, although that does seem very unlikely. Wave 3 pink will reach equality with 1 at 1394.39. This is our target for both of these hourly wave counts. If we see movement above 1330.67, then this is the most likely explanation for Monday's session. It is certainly possible that the second wave correcting the first impulse up, is incomplete and may extend yet further sideways as a double combination, or further lower as a double zigzag. We would still be within wave X, a zigzag to join the two structures. We have a 5 and still not quite a complete 3, and then we'd need another 5 up to complete a zigzag for wave X to join the double. And then we'd have a second structure, and this is possible if this wave count's correct. It's possible this may make new lows below this point, but wave 2 orange may not move beyond the start of 1. It may not move below 1318.51. When that's finally over, and if this alternate hourly wave count does play out, then this could take another day or so to complete. When it's finally over, we'll see price finally move to the upper end of this and outside of this parallel channel on the hourly chart, and again that's when we're going to have our trend channel confirmation of this trend change at pink or minute degree, and then we can be pretty confident that we are indeed in a third wave upwards. The target's exactly the same. I have this alternate daily wave count. My main wave count sees black 1, 2 and black 3 and 4 here. I actually like that better despite the odd look of this third wave, because this piece of movement here is nicely in proportion to this piece of movement here. And for our main daily wave count, when we draw the trend channel using Elliott's technique, it fits really, really well. This channel I've drawn here is a best fit. This is not Elliott's technique, and when we draw Elliott's channeling around this piece of movement here from 1 to 3 in a copy on 2, it doesn't contain most of this movement. If we draw it from 2 to 4 and a copy on 1, it doesn't contain the upper part of this movement and all of this. It just looks absolutely horrible. So I've just drawn it as a best fit. That tells me that the main wave count on the daily chart is probably more likely than this. However, I will consider this. The other reason why I don't like it is the third wave at blue or minor degree is actually a little bit shorter than the first wave. It's 16.18 points short of equality with wave 1. What that means is the fifth wave may not be longer than the third, because the third may not be the shortest. And with this structure here telling us that the fifth wave is developing an extension, that seems extremely unlikely. If we draw the trend lines, though, from the high of here to here and place the copy down in the low of this fourth wave, it perfectly shows us where recent downwards movement came to end. One final reason why I don't like this alternate wave count and why it's an alternate and not the main is this second wave correction is a sub-minute wave which really shouldn't be taking this long in duration and shouldn't be so large on the daily chart. Just taking you back to my main daily wave count to have a look at how we can play with some trend lines. This is how I've drawn the trend lines on the main daily chart, from the high of 1 to 3 and then a parallel copy on the low of 2. But if instead of placing this parallel copy on this low down here, if we place it on this next low, which is slightly higher in price than the previous low, then we have this. So we place the copy down here, and now it almost perfectly shows us where this correction ended up and found strong support, and it also shows us where the last couple of downwards movements have found strong support. We should expect any further downwards movement tomorrow or in Monday or Tuesday sessions next week to find strong support at this point down here. So that's all for me to end your S&P analysis for the week, and I hope that everyone else is having a most fabulous weekend.